What's going on, everybody? So welcome back to the channel. In today's video, I'm going to be showing you how I made £300 in one day trading gold, risking only £70 on this particular trade. So it was around a 1-to-4 risk to reward ratio. So if that sounds interesting to you, make sure to stick around until the end of this video. Make sure to like and subscribe. And before we get into the breakdown, here is quick proof that I took the trade and it was also on a live account. Now that that's out of the way, let's get straight into the breakdown. Okay guys, so as mentioned, I'm going to be breaking down this 1-to-4 trade that I had on gold at the middle of last month. So this trade, it basically originated on the daily time frame, and we then broke it down over to the lower time frames using a top-down analysis approach. So what I was seeing at the time was that on the daily time frame, price had come into this area of demand on the daily. And then we had this huge impulsive move over to the upside, which was catalyzed by the announcement of the Israel-Palestine war news that was going on at the time. So this whole move basically started due to an awareness of the fundamentals that were going on at the time, and we combined that with the technicals in order to capitalize on the move. So fundamentally, price was bullish, as if you guys don't know, gold is a risk haven asset, which means that when investors are worried about investing their money in the US dollar, they will normally take their money out of US dollar related investments and pour it into gold, leading to a greater demand for gold and hence a bullish move like this. On top of that, looking at the technicals, price was in this sort of internal downtrend for quite a while, since around May. But once it tapped into this demand, we had this move up, taking out this daily structure here, which was our daily change of character. So change of character meaning the first breach of the lower high, creating a higher high, signifying that the trend may want to continue higher. What I then also noticed was that we had this level of daily demand just here, which was the last sell candle before we had that breach of structure to the left, and price also left behind this imbalance just in here. So I was expecting a reaction from this area of demand, if not a complete reversal, which did end up manifesting in the end. So either way, I was expecting a reaction from this zone, and then what I simply did was go over to the lower time frames. So going over to the 4-hour time frame, first of all, we can see that this whole area was the area of daily demand. Once price came into that area, if we go to the 1 hour, on the 1 hour time frame, this was key for me in looking for the buy positions. So we had a sweep of these equal lows, or sorry, these sort of like trend line lows into that area of demand. And then on the 1 hour time frame, we had our first break of structure. This was the change of character. As you guys can see, beforehand, we were in this hourly bearish trend as we made our way towards that daily demand zone. This was the lower low, lower high, lower low, lower high, lower low. But once price came into that daily demand, this overall series of lower highs and lower lows ended. And then price printed this higher high after sweeping that early liquidity above demand. So originally, the entry I was looking for was at this area, and I was going to be looking for buys if price came back into this zone and gave a valid confirmation. However, if we play price, you guys can see that we never actually came into that zone. So after that, I basically adapted to what price was showing, and I was looking for other entry areas. So you guys can see that after we made this impulsive move up and caused that change of character, price was consolidating. And then when news came out, I believe this was CPI news, price wicked out previous buyers in the market, tapping into this imbalance, or FVG, whatever you guys like to call it. We then had this second wave over to the upside, taking out multiple areas of structure to the left, which added further confluence to the probability that price was going to head higher, because looking left where price is now, there's nothing to cause it to completely reverse and head back down to this low. On top of that, price hadn't taken out any major areas of liquidity, so we were anticipating that price was likely to head higher. So what I simply did then was I went over to the 15-minute and basically looked to follow the current order flow and the current trend at the time. So marking out the current structure, we had this initial change of character. I was viewing this move down as a pullback to create this as the higher low, meaning that this was our next breaker structure in the sequence. So just marking that on. And then playing price a little bit more. If we go on to the 1 hour, that might make it a bit quicker. Right, so at this point in time, this is when I began to look for the buy positions. So what I was seeing was that we had this pullback here, which pushed up and then broke this high, causing another breaker structure. But what I also noticed was that at the time, this was the Asia low, and you guys can see that we clearly created this sort of floor of liquidity, where we can see that multiple people were buying in this zone, meaning that there was a lot of orders to be collected below this zone. And I knew that price was not necessarily going to definitely, but it had a high likelihood of heading back down towards this zone and taking out previous buyers before it headed higher. And as before, looking to the left, price is not in any significant areas which may cause it to completely reverse. So that also gave me a confidence that this trade was likely to play out and head higher. So basically now that we've mapped all of the structure, we've had the breaker structure here, the breaker structure here. I was simply looking to follow this 15-minute trend. But what I also noticed was that we had this unmitigated level of 15-minute demand resting below this sort of area of multiple equal lows, which I thought price was likely to come lower and take out before we go higher. So what I simply did then was set a limit, or sorry, an alert at this zone and waited for price to come into it, which you guys can see we came into it just there. And basically after price came into my zone, I went to the lower time frames. So in this case, the 5-minute, since it was a 15-minute POI, or point of interest, if you guys are unfamiliar. And what I simply did was mark on the current structure on the 5-minute, which you guys can see, this was the most recent lower low. So this was the most recent lower high, which put in the new low. So what I do then is set an alert for price to come into this area. And if price breaks the most recent lower high, meaning that we have our confirmation or a change of character style entry for price to head higher, then we can look and see if price has presented any areas to enter from. So in this case, I was simply waiting to see if price would break past that zone, which eventually, if we keep playing price, you guys can see we did just that. So that was our change of character. Also, one other confluence I was seeing on this trade was that we had this wick here, which was created by, I believe it was PPI news. But either way, it was created by news, meaning that there is a lot of liquidity resting within this wick. And I thought that price, given this like current bullish move, was likely to head up to at least this wick before we saw any sells come into the market. So simply what I did, after we saw this initial change of character, I identified the last point of imbalanced demand, which was this zone right here on the 15-minute. You guys can see this was the imbalanced area, which caused this structure to the left to break and put in a new high. We also had this as an area of inducement resting above the zone. So that is our liquidity. The three main confluence that I'm using for my entry confirmations, by the way, are a change of character in that higher time frame point of interest, an imbalanced level of demand if we're looking for buy positions, and then I also want to see some sort of liquidity being engineered above that entry zone, so that we are making sure that our entry is not the liquidity, and we are basically enter in the market when other people are liquidated and taken out. So all I did at this point was simply set a limit order at this zone, and I had a 30 pip stop just below. And the reason I had such a big stop, a lot of price action traders will see this as an area of demand and they will just set their stop loss like this, very tight below the zone. But what I've noticed through backtesting gold and collecting a lot of live data is that gold sometimes likes to manipulate the areas of demand and wicks below them. So I always like to sort of like leave a little bit of room below the area of demand, just in case price wants to wick out any early buyers in the market, which in this case it did, as you guys will see in a moment. And second of all, we also had this other area of demand, this one here, resting below, which price may have also wanted to touch if this first level didn't hold. But if price was to go any lower than this demand, then it was probably going to head back down towards this previous low, in which case we would have wanted to be out of the trade and just admit that we were wrong. So now that all of our confluences are there, again, starting from the very beginning, we've identified our overall higher time frame bias by going onto the daily time frame, marking out and mapping the current structure. We then identified the daily area of demand which price was approaching. Once price came into that daily area of demand, we went to the medium term time frames such as the 1 hour and identified a structural shift from bearish to bullish. And then what we simply did was go to the 15-minute and map out the current order flow by drawing on the main structural highs and lows, as in this case. And then I simply identified a point of interest, which was validated by the fact that we had liquidity resting above, price was overall bullish, and then we identified an area of demand which created imbalance and also took out an area of structure to the left. Once price came into that area, we went down to one time frame lower, which in this case was the 5-minute, and we simply waited for price to break structure to show us a willingness for it to head higher. In this case, price closed above this 5-minute lower high to the left, showing us that price is willing to go higher. And basically what this means now is that all time frames are bullish, all time frames are probabilistically on our side. And at this point, we simply just set the limit at demand below the liquidity and wait to see what price does. So if we play price, you can see once we wicked into that zone, price did actually take out the low of that demand. So if you guys would have had a stop at the wick like this, you probably would have been stopped out. But like I mentioned, with gold, you want to kind of add a little bit onto the stop loss just to make sure or prevent that from happening. It's worth it to sacrifice a little bit of the risk to reward in order to have a much higher win rate. It's better for the psychology. And it really doesn't make sense for me to have a very tight stop loss for the sake of like one more percentage gain on this position when it was already a 1-to-4, and I am more than happy with a 1-to-4. So as you guys can see, once price tapped our area, we pretty much flew straight to the take profit. And after that as well, if we go back over to the higher time frame, you can see that price just continued to fly over to the upside. And we could sit back here and say that, oh yeah, we should have held until this high for a 1-to-15, but hindsight's a wonderful thing. Hindsight is 20/20, and you will never know at the time whether price is going to go all the way up to here. It could have easily reversed at this point here, pulled back, taken us out, and then we would have basically felt stupid because the trade was running for a 1-to-10 and then it pulled all the way back and took us out for a break even or stop loss. It's just not ideal, and I'm not really the type of person to let a 1-to-10 risk to reward pull all the way back to break even. I'd much rather just take the profit at 1-to-4 and move on to the next trade. So yeah, that was all there was to this trade. If you guys made it this far and enjoyed the breakdown, make sure to like and subscribe. It really helps with the growth of the channel. And if you guys want more trade breakdowns like this one, make sure to mention it in the comment section below. Or if you have any other video suggestions of things that you would like to see, maybe back testing, maybe more trade breakdowns, make sure to let me know in the comment section below so that I know what you guys want to see in the future. But thank you guys for watching, and I will see you in the next video.